Last year, 142,000 millionaires moved capital across borders. According to Alien Partners' 2025 Wealth Migration Report, most of them didn't pack their bags, they just moved their money. Where the capital went is a pattern worth studying. Today I'm going to break down 5 countries based on 4 specific criteria. Because best banking jurisdiction without a profile attached to it is a meaningless question. Best for whom? With how much capital? Looking for what? If you want diversification, protection and banking infrastructure that actually matches your level, keep watching the video. The 4 criteria I use to build this ranking. Number 1, geopolitically stability. How safe is your capital if something goes wrong in the jurisdiction? Number 2, the real entry deposit. Not what the bank publishes on their website, what clients at our level actually pay in practice. Those numbers are often 5 to 10 times apart. Number 3, remote opening feasibility. Flying somewhere to open an account is a real cost in time and logistics. Number 4, reference value. When the next bank reviews your profile and sees you hold an account in this country, what does that communicate about you? Let's go from 5 to 1 top jurisdiction. Number 5, Panama. Panama is called the Switzerland of Americas in banking cycles. That description exists because of one specific fact. No bank has ever failed in Panama. Not during the 2008 financial crisis, not during the Latin America debt cycles of the 1980s and 1990s. The country's banking regulation was built around stability and that record has held. For our profile, the case is straightforward. Panama operates in US dollars, outside the European regulatory system entirely. Geographic diversification of capital, but in actual currency and regulatory jurisdiction. And the entry barriers are accessible. Through GloboBanks, some accounts open at a few $1,000s fully remotely. Here's what I'd rather tell you now than have you find out after commenting. Panama is slow. The bank receives an enormous volume of international requests. The compliance checks are thorough. And Panamanian banking culture operates on a calendar with significantly fewer working days than you'd expect. There are months where 60 calendar days contains around 15-20 working banking days. If you're building a multi-jurisdiction structure, Panama typically goes in later in the seconds, not first. The reference value is also moderate relative to the other 4 countries on this list. A Panama account adds continental breadth to your portfolio, but when a Swiss private banking reviews your overall picture, Panama doesn't move the needle the way Switzerland and Singapore does. Panama at 5, legitimate US-based accessible deposit points, best positioned as a later layer for a specific profile. Number 4, the United Kingdom. Specifically offshore UK banking. The FCA, the Financial Conduct Authority, is the regulatory standard that other jurisdictions are measured against. Holding an account under FCA jurisdiction sends a precise signal about your compliance history and risk profile. The entry deposit for offshore UK options sits around 100,000 euros. Partial remote opening is possible with timelines running to about 60 days. Now, the part that changed in the last 2 years. Post-Brexit, UK banks have tightened their criteria for EU resident clients significantly. Institutions that used to process European entrepreneurs without any friction now apply much stricter screening to that specific group. And for our profile, a European entrepreneur based in Italy, Germany, Spain or France, that friction is real. That's why UK sits at 4 rather than 3. The FCA regulatory prestige is genuine. The accessibility for a European-based entrepreneur has declined, and that matters when you're building this structure. The use case where UK moves higher if your business, for example, has a meaningful sterling exposure, or if your primary clients are UK-based enterprises, then the currency match and regulatory alignment changes the calculation. For pure diversification, it sits here. Number 3, the United States. Something I want to address directly before the criteria. Opening a US bank account remotely as a non-resident through normal channels, you get a no. The banks that operate at the level our clients need accept new international clients solely through a direct internal referral from a trusted source. Without the channel, the conversation doesn't start. GloboBanks clients can open US accounts because our founders spent 3 years building direct relationship with specific bank managers at US institutions. The trust runs to that person, not just the company. That's what an introduction actually means in practice. It's not a warm mail, it's a relationship the bank has verified over years of referrals. And the taxes matters for 2 specific reasons. The first is operational. A US premium bank account at an established institution is what enterprise-level American clients expect when they wire money. What payment processor treat as primary? What signal legitimacy in dollar-denominated markets in a way that a European fintech account simply does not. The second reason is the credit card system. This one surprises most European entrepreneurs when they first encounter it. With a US LLC and a US bank account, you become eligible for the American business credit card market. Take one example, the Amex Gold business give 4 per points on advertising spend up to $150K per year. The Capital One Venture Series start accessible and scales at the Venture X level. You're looking at 10 per points on hotels and 4 per points on flights. People who understand this system and have advertising on traveler budget use those points for business class flights. European business cards programs don't offer anything close to this reward structure. Through our referral, we facilitate fully remote account opening for both personal and business entities without initial deposit starting from just a few $1,000s. 12 months of activity on a US premium account changes how the next institution reads your profile. Number 2, Singapore, the Switzerland of Asia. That comparison has been used so often it almost lost meaning, except that every criterion that makes Switzerland rank 1 on this list applies to Singapore's context in Asia. Politically stable, street regulated, home to banks that financial regulators in multiple countries have quietly designed too big to fail, meaning in a crisis, government intervention protects depositors. The structural backstop doesn't exist in most banking markets. For our profile, Singapore solves a problem that Switzerland, the US and the UK cannot. True third continent diversification. Your Swiss account is in Europe. Your US or Panamanian account is in America. Singapore puts capital in Asia, a third regulatory system, a third currency zone, a third set of geopolitical conditions. The entry deposit through GloboBanks is just about $200,000. The same account at the same institution approaching directly without an introduction could require at least $1 million. Remote opening is fully possible through our channels and the process typically runs around 45 to 60 days. Singapore makes the most sense at the higher end of this profile. If you're working with 2 million or more in liquid capital and already have a Swiss account established, Singapore is the natural third layer. Reference value very high. And here's what that means in practice. When a Swiss private banker reviews your onboarding documents and sees you already hold an account at Singapore institution, it signals a level of international financial structure that most European entrepreneurs, including ones with significant capital, haven't built. Number 1, Switzerland. Switzerland scores highest on every criterion in this ranking. Geopolitical stability. The Swiss banking system has run continuously through 2 world wars and nearly 3 centuries of European political turbulence. The Swiss franc is a reserve currency. The regulatory framework was built explicitly around one purpose: protecting assets across generations. Over 90% of Swiss banks are private banks. They don't process payroll or handle e-commerce payments. They exist to protect and grow capital over long time horizons. The client profile they were built for is exactly the profile watching this video. Entry deposit through our introduction is that the realistic range is from 100,000 euros depending on the institution. Without an introduction, the same account starts at 500k to 1 million euros, requires physical presence in Switzerland and can take months. Our channel reduces the required deposit by 5 to 10 times and makes fully remote opening possible in just an average of 30 days. The yield on deposits of money that's just sitting in the account averages around 3% per year. On 100,000 euros, that's 3,000 euro per year. Swiss private banks assign you a relationship manager who speaks your language, also Italian in many cases, and who you reach directly without a support queue. A named person with your file reachable on the phone. Remote opening? Yes, fully possible through our introduction channels. Reference value, the highest on this list. In practice, when you apply to open a Singapore account, a US premium account, or approach any other institution internationally and your paperwork shows an active Swiss private banking relationship, the application looks different. 5 countries, 4 criteria, 1 profile. Panama at 5, US-based, legitimate diversification, accessible entry, best as later stage addition to a structure you've already started building. UK at 4, FCA regulatory prestige, higher friction for EU residents since Brexit, most relevant if you have sterling exposure or UK business operations. USA at 3, a must-have for anyone with an LLC and open the US credit cards ecosystem, which has no European equivalent. Singapore at 2, third continent diversification, 200,000 US dollars via our introduction versus 1-2 million direct, too big to fail institutional banking, strongest fist from 2 million in liquid capital up. Switzerland at number 1, from 100,000 euro entry through our introduction versus 500k to 1 million direct. 3% yield on invested deposit, relationship manager, the highest reference value in international banking. If you want to understand which of these makes sense for your specific situation, the link in the description goes to a free initial consultation. We've opened over 600 accounts for clients at this level, and the conversation always starts from your profile, not from a standard product. See you in the next one.